majority of proceeds
Oh.
towards the new loan,
Mhm.
because you want the lower payment. So it's like, I don't want to move until I buy a new house and then take my time moving. So a recast is you buy a $500,000 house, you do 5% down minimal payment, and
Mhm.
then you sell your $300,000 house for cash. You want to take all that 300 and put it towards the loan of 450 or whatever it is. You can do that. And then they'll redo the loan payment based on the lower loan amount.
So
So
now
you're
you're looking at, instead of a $450,000 mortgage, you're looking at a $200,000 mortgage ish.
exactly. Yeah,
Yeah.
exactly.
Oh, that's huge. I've definitely had people do that, and it's huge, and they qualify for that payment, but they don't want that payment. They want to take that equity. So yeah, that,
100%.
but but you don't have to, as is so difficult. And every time I make this work right for somebody, I'm so impressed with myself. Like, in order to sell it and buy, to sell and buy and get all the timing of all the moving parts to work, so that nobody's homeless and nobody's having to live in an Airbnb for a month or go sleep on their parents' couch. That's such a better way to do it.
Well, I mean, the keys are, and it's not really like negatives, it's just the reality of it. It's like you got to be able to qualify for both. And then you have to have some sort of a down payment for the minimal amount of down payment. Put the
Mhm.
minimal amount 5%, you sell your house, and then you come in and pay it down more. But the advantages are lots. It's like you don't have to pay for a refinance. You keep your same rate and terms. It's different than prepaying your loan. You could do the same thing and prepay your loan and keep the same payment. This is giving them money and then they lower the payment based on how much you owe.
What the current principal amount, what the new principal amount would be, but your
Yeah,
rate, your terms, and all that are the same. So if it's a
right.
30-year mortgage, now you're in a 29.7-year mortgage, or whatever, a 29.5-year mortgage,
Yeah.
whatever it is,
With the same terms.
with the
So,
same terms.
I mean, and it solves a huge problem. And a lot of people just don't know about that. So that was a popular topic that I had that seemed to get a lot of traction. As far as are we talking right now? You're recording?
Yeah, I'm recording.
Okay.
Yeah, I'm recording.
Yeah.
It's yes. Yeah, just keep talking.
Okay. 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 So as far as what I'm seeing in the market, very positive things, lots of positives. As far as activity, rates have trended down. They blipped back up a little bit, but they're down from last year. We think they're going to be down, continue to go down throughout the year and
Mhm.
the following year. So, that's what we believe. I don't know if that's correct, but that's what we believe. So what
That's what
we're
your crystal ball is telling you anyway.
yes, my crystal ball for sure. And we've already seen it. We're seeing an uptick in activity. Our application level through our company is through the roof. We track our applications and how many applications we get per week. Generally, we're about 50 or 60 applications a week. We're now 80 and 90 applications a week, which is
Oh, that's
telling me
fantastic.
that people are back in the market. They're very interested. The new year's starting, rates coming down a little bit has spurred them on. So, a lot of the talking points is like, okay, I'm going to wait for rates to go down and even more. Well, the problem is that depending on where you are, prices really aren't going down that much. I mean, we've had multiple situations where there's been multiple contracts that
Yep.
they're outbid by cash buyers. What does this sound familiar? I mean,
Oh, there is still a lot of cash. Absolutely. And what I'm seeing, because I track data literally every Monday morning. That's the first thing I do when I sit down at my desk, is I track local data out of
yeah,
our local MLS system, so that I'm keeping track of it for myself. And
sure.
yeah, I'm seeing the numbers are trending up just like they should. At the beginning of the year, we're about the same level of inventory, a little bit less inventory than we had this time last year.
Yes.
Which means inventory is going down,
Mhm.
demand is going up, interest rates are going down or holding steady, which means
Right.
exactly what we all think it means. It means we're going to start seeing prices push up, because at
Yes.
6,900 properties on the market currently in our MLS, which sounds like a lot considering 2 years ago we were at like 2,000. and it was horrible because that's not normal or
Yeah,
sustainable.
yeah,
We should be at like 10 or 11,000. That would be a
yeah,
more even market. So we're
yeah.
still low on inventory. It's still
Well, and
hard.
that is absolutely true. And we're building up to that situation where, man, if you really want that house, there's going to be a lot of competition for it. So, you may consider not waiting, and also kind of a leading indicator. We do a lot of new construction with builders. We're lucky to work with several builders, and man, their activity is through the roof, which typically throughout all of the years we've done new construction and work with builders, that is a forecast for what's coming, which means resales and everything else seem to follow that. So,
Right, because most of those people have houses. Your first home is typically not new construction.
right, right.
It's hardly ever, I mean, hardly ever. So yeah, so we're looking at people that have houses to sell. And so at this point, we're back in a market. Again, we're going to be back in this challenging market where things are moving. And yes, interest rates are higher. And I wish it was easier for your first time home buyer. And I know
Yeah,
there's bond programs, there's programs out there for that. And we can talk about that at some point in the future. But what we're seeing is now we need to be problem solvers for those people that have a house to sell and have equity. They all have equity in their homes that they need to tap into. And
yep.
how are they going to do that?
Well, and that brings up a really good point, Lesley, is like if you have people kind of I have a house, I'm thinking about selling it, thinking about doing this. I always recommend people get an equity line. Go to your local bank. I can refer you someone, get an equity line on your house. Generally, it doesn't cost anything to do. And an equity line works just like a credit card. It's there for you. You have a limit and you use it and you pay on it as you use it. And the reason why I'm saying that, if you're thinking about selling your house, is that you can have that line of credit ready to put as a down payment on the other house, in lieu of what we were just talking about with the recast. So in the situation where I want to buy a new house first and then sell my other house because I don't want to deal with the moving and all of that
Right.
stuff problems, this is a good interim way to be ready for that with an equity line. So you have that money to put a minimal down payment on the new house. You buy the new house, you sell the old house, you pay down the loan with a recast. That's kind of the playbook.
Yeah, so solutions for all kinds of people. Um, do you have anything at the moment? And I know I know there's some programs out there, but at the moment for people that, well, I guess you're hypothetical, but what about the people that aren't going to qualify for both mortgages? Do you
Well,
have anything in place for that?
that's a tough one. However, I will tell you my experience, Lesley. Most people qualify for more than they think.
Okay.
I get the call, hey, I don't think I can do it, because a lot of it stems from I don't want to do it, which I get it. It's like
Right.
it's
It's
scary. I
scary.
don't want to have two payments. What if it doesn't sell? Whatever. I get that, but that's separate than can you do that on paper? So if you can get over the comfort level, you may be able to qualify for that. So some of the solutions, talking points, regardless of how you look at it, you got to qualify. So, but some of the ways that you can is, maybe pay off a debt temporarily that we can pay off at closing when you're buying the new house. And then, when the old house and the dust settles, maybe you retake out that debt. I don't know. But, I guess what I just see a lot of times is people don't think that they can, and a lot of times they can. So pay off debts at closing, tap into the family and the parents for gifts, to try to alleviate that, maybe put a larger down payment. But the problem of qualifying is there for sure. But I always like to look at the situation and really see and lay it out for them. It's like, yeah, you do qualify. Do you want to do it? And this is how it would work. You know what I mean?
Right. And I mean, people are going to have to make choices and
Yeah,
occasionally make sacrifices, but it's a temporary sacrifice. I mean, the
sure,
reality
sure.
is, if you were smart with your first purchase, and I've had so many customers look at me cross-eyed because I'm the queen of talking people out of things.
Yes.
Because, I mean, back in 2020, 2021, we'd look at a property and it would have a gorgeous kitchen and the house is amazing. And yet it backs up to power lines in a major road.
Right.
I'm like, look, I get that in this feeding frenzy of a market, this seems like a great deal because this kitchen is stunning. They've done an amazing job. However, in a different market, this kitchen doesn't matter. And I
Right.
have been the queen, and people have thought I was crazy, and they've thanked me later because I have been the queen of saying, no, I don't want you to do this. I know this hurts, but let's keep
Yeah.
looking because
Yeah.
this house is only this amazing because of the market of the moment. So unless you've made a rash decision and bought the house in the market of the moment, and even then, everything will sell. It just depends on the price.
Sure. Sure.
And we're still in low inventory. So there's still high demand, low inventory.
Yeah.
Not like 2-3 years ago. Thank God. Thank God. Nobody needs that. Nobody wants that.
Right. 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 Well, you're exactly right, Lesley. And you absolutely have your hand on the pulse of that. The age old things come into play. I don't see it as much on the mortgage side, but I hear it. It's like the houses that are up to date, they're selling immediately. It's
Mhm.
like on the same street. One's a little bit more expensive and it is up to date, ready to go. Boom, multiple contracts. The other one just sits.
Right.
Location and up to date, man, because people just they don't want to do renovations. So it's like the simple things of maybe redoing the floors, sprucing up that kitchen, things along those lines. I'm seeing that, become more into play.
Yeah. Oh, absolutely. Absolutely. Yeah. People
Another thing
definitely don't want to do that.
for sure. Another thing too, and this just kind of seems obvious, but I'd like to talk about it a lot, is a quick closing. So if you're trying to get your price or you're competing and you can come in there and say, I can close in 2 weeks, maybe that turns on the seller.
That's kind of huge. Yeah.
uh, you know, we have the capability to do that. But that is just a kind of a simple thing that people forget. It's like, you never know, as you know, Lesley, you never know where the seller's motivations are. And maybe they want to get out quick and maybe
Mhm.
they'll accept this or accept your offer. So that's always on the table. I want people to know that the 30, the 40, the 60-day closings is a requirement. That's a thing in the past. It's like, if you need to close fast, there's ways that can be done.
And so, all right. So, in order to do that, what do you need to have in place? So, you need to have fully applied for a mortgage, right, with
Yeah.
everything but an address. They needed to have provided you docs, like, which means we need to have you dialed into them from minute one,
Yeah. I
right?
mean,
And they need to be engaged and responding to you and giving you everything that you need in order to make. So you're not making that credit decision at the end. All you're doing is making sure the house is worth what it's worth and what we all think it's worth.
for sure. For sure.
And yeah, and doing inspections.
No, that's a great point. It's, being prepared. I always like to say start fast, finish slow, which means bam, 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 get all your information, get it all in there. Let's get it reviewed. And man, we're clear to close early. So there's no stress at the end. So go to your point for sure. Apply. Let's lay out a blueprint. Let's lay out a plan. This is what your payments look like. Oh, you like this property? Let me get you an estimate so you can see what the taxes are.
Mhm.
Here's 3 different options of rates. Maybe you want to buy rate down. Maybe you don't. Whatever's important to you, the payment or the cash to close. We can lay all that out. But being prepared and proactive is the name of the game. We move pretty fast, and most problems can be addressed right out of the gate if you're proactive and moving fast.
Yeah. Oh, absolutely. And I know, and this doesn't have anything to do with what we were just saying, but I know I've got a question that I know people are starting to ask me
Yeah.
and that you can probably answer. Talk to me about what the difference between a broker, a mortgage company, and a bank.
Oh man, I'm so glad you asked, Lesley. Well,
I mean,
that's a
it's confusing to people who don't know.
It's a very good question. So this is the way I put it is, when you go to Bank of America, you use all of Bank of America's stuff, products. You use their rates, you use their mortgage programs, you use all Bank of America's, and that may be perfectly fine. When you go to a broker, they have 70 different Bank of Americas that they choose from to put your situation in, whether it's a product that's special to you, whether it's the best rate that's special to you. It's all about choice. It's in our world today, consumers demand choice because they want the best option for them. That's the
Mhm.
major difference between a lender and a broker. Is a lender has one choice, which may be fine. Nothing wrong with that. as a broker, we have multiple choices. So to me, as a consumer, I would prefer working with a broker. I mean, I'm a little biased, but you know, there's just multiple choices. So we're shopping for the best choice for them. Does that make
I love
sense?
that. Yeah, no, that's fantastic. Because I mean, and I know, and there's a reason that you're one of my top people that I send people to is
Well,
because
thank
I
you.
know you have the one, you're amazing and you've been doing this for forever.
Thank you.
Which I
I thought it
love. I
was my
love the
looks, Leslie. I thought it was my looks. Was it my
well
looks?
then there's that. Absolutely.
Well, no, I
Absolutely.
appreciate that. I think choice is big. You know, we were talking about before, when someone wants estimates, we give them multiple choices so they can pick what's important to them. You know, it's just all about the choice and the consumer making the right decision. And we try to give them all the information to do that.
Well, it gives you some options for things like second homes. And I mean, can you do, and you may, and the answer to this may be no. What about lending on land? What about lending on mobile homes? What about lending on some, more unusual, rare things?
We can, and that's a benefit of a broker too, is you have multiple options. We do have a land loan. We do have mobile home loans. You know, we have construction loans. We have self-employment loans where we just qualify off of your bank statements. We have investor loans where you're just qualifying off of the rental income of the property. Now, there's pros and cons to all of those that come with all kinds of different rates.
Sure.
The important thing is choice. We just signed up an investor that does fix and flips. What I mean is short-term loans, like, hey, I want to buy this property. I'm gonna work on it for 6 months and I'm gonna flip it. That traditionally has always been hard to find a loan. Now we have
Yeah,
an investor
that's
that does
traditionally
that.
a hard money. Like honestly, typically, normally, someone that you know that's interested in lending money, not a yeah.
Yeah, and typically is hard money and it works the same. It's actually really cool. It's for investors for situations like that, or investors that, you know, their income situation is complex. They're really in this loan, they're looking at your credit and the collateral, the house. So the income they're not looking at. Now it's going to come with higher rates, but you know, it's in the investment world, it's all about
It's always going to
what
be
am I
high.
getting for rent versus what my payment is, you know, so rate obviously is you always wants the lower rate, but if it meets your need, you know, it's kind of irrelevant when it comes to that. So
Yeah,
yeah, I mean,
absolutely.
you have
That's
lots
amazing.
of choices.
Yeah, because I haven't heard of anybody doing that. I mean, well, that's not true. I've heard of people doing that, but those are hard money lenders. Those are people
Yeah,
that, and again, individuals. It's investor groups that the text message goes out. Who do you know that's lending right now? But we're talking about people with their
yes,
terms.
for
So
sure.
that's amazing.
Yeah, choice, choice, choice. So that's what we preach for sure.
I don't, and on again a totally different topic because I don't want to forget to ask you, and I know we don't have all day to do this, because I could do this all day with you, but are you seeing? How are you seeing as far as qualifying people? Are you struggling with because inflation's real? Um,
Yes,
and I know, I mean, I keep preaching, and it's a message it kind of falls on deaf ears sometimes, that one of the best ways to control your expenses in life, because housing costs are going up like crazy. They're going to, as we've talked about, they're going to continue to go up. Rental costs are also going to continue to go up because the cost of homes are going to go up. The best way to control your housing cost is to own your property.
for sure.
But are you seeing inflation affect your buyers? Are they struggling to be able to buy? Are you seeing that people are struggling to be able to buy the things they want to buy?
Well, that's a great question. As my view, I don't see the problem in qualifying as much, is
Mhm.
more the problem of people not having the wrong expectations. The days of having a $1,500 a month mortgage payment it just isn't there. Uh,
Mm-mm.
you know, it's shocking to me sometimes too, when like I'm doing an estimate on a $300,000 house and their payments 25, 26, $2,800. You're just like, man, that doesn't make
That
sense.
can't be right.
Like
Yeah.
it's a combination. Rates are higher than where they were. They're not 3%, but they're normal. They're normal in the scope of things. So
Right.
you have that. You have the taxes. The taxes are what they are. Property taxes going up. When your property value goes up, your taxes go up. And then insurance. Insurance is nothing to sneeze at anymore. It's just as much of a process sometimes as getting a mortgage, getting the insurance. and the costs are higher. I mean, on your, it could be $150, $200 a month when 5 years ago it was $100 a month. So to answer your question, Lesley, I'm seeing more people that have a little bit more sticker shock that can afford it on paper, but are kind of like, oh man, that's really high. So that's why it's even more important. Get pre-approved. Let us do estimates while you're shopping. There's no obligation. It's like, hey, Aaron, I just saw 123 Main Street. What does my payment look like on that? Okay, here it is. Here's 3 choices. So the worst thing in the world is getting into a contract and loving a house without knowing what the payments are going to be. Then you're like, oh my gosh, it's a letdown. So that's solvable right up front.
Well, and that's always been my thing, when dealing with people. Like, I don't really care how much money someone will qualify you to purchase with, a $500,000 home. Great. What's your comfortable payment? Because
Yeah, sure.
that's what matters, fundamentally on a month to month, what you're
Well,
comfortable
and
paying is what matters.
and it's frustrating for us too. And I know it's frustrating for realtors when the client says, I need a $200,000 payment or $2,000 payment, like great. And then they put a $400,000 house with little down payment and their payment is 3,500. And they're like, what can we do to get the payment lower? And man, I'd love to, but even if your rate was 0, you're not going to get close to where you're at.
Right.
It's just kind of, but that's an okay process. It's okay because that's part of understanding where it's at, where you're comfortable with, and seeing the numbers, and there's not surprises. Being proactive eliminates
No
surprises.
surprises.
Right.
Yeah, that's the main thing, right? No
Yeah,
surprises.
yeah, for sure. And a $300,000 house that's in a high tax, high CDD, high HOA area may be a higher payment than a $400,000 house in an area with no CD, no HOA, and maybe the taxes are lower. So you can't judge it just on the house. It's got to be the whole thing,
Oh yeah, and we definitely have some areas that I find I have sticker shock when I drive into them
Yeah,
as a realtor, which is a struggle for me because I'm
I
like,
know.
all right, so the HOA, the CDD, the Master Association, you still don't belong to most of the amenities, so there's still that payment, which I know doesn't factor in. But I'm like, what is happening right now? How much are we just paying in fees?
Yeah, well, it goes back to your saying about inflation. I mean, inflation trickles through everything, but just costs are higher. The $1 million house isn't the mansion on the beach anymore.
Mm-mm.
It's the house way across the beach that may need some renovation. You know what I mean? It's
Right.
just things are more expensive now. That's just that's the way it is.
Yep, absolutely. And it's a little hard to take sometimes, but
Yes, for
it is what
sure.
it is. When everybody still needs to have a place to live, and change in life still happens. People
Yeah,
are, as we see, when you have 80 or 90 loan applications a week coming in, people still see motivation to move. I mean, if you're giving up your 2.5% interest rate for something, there's a reason. You didn't just wake up one
100%.
morning and go, I think I want to move.
Yeah.
There's a reason.
Well,
People are going to get married. They're going to get divorced. They're going to have babies. They're going to have elderly parents. There's a million things that are going to continue to cause people to move in this
yes.
market. And that's never going to end. I mean, what was it, the 80s, we saw interest rates in the 13 and 14%.
Yeah.
I mean, I remember my mother was in real estate back then, selling real estate back then with, interest rates at 13, 14, 15%.
Sure.
Easy to think about.
They still sell then, and people are still moving to Florida in droves. They just are for the reasons why we're here. So
Yeah.
that train has not ended. People are still moving here, and the better and better technology is where people work wherever they want. That they're choosing to come here. So we got a lot of good stuff to offer in North Florida. We know that.
Yeah, we do. Absolutely.
Yeah. Yeah.
Well, what questions am I not asking you that you wish I was?
Yeah. No, I think you're hitting some important points. It's like, we talked about kind of like buying and selling. Is there a way to do that? Recasts, things along those lines. What do you need to do to be ready to get qualified? And it's kind of, it's the same old thing. It's not procrastinating, getting your loan application, get your documents in so we can make sure that there's no surprises like we talked about. The third component was estimates like, hey, you've been qualified. I just saw this house I really like. What do the payments look like? What do the choices look like? we pull the taxes. We give you an estimate on insurance. We show what your principal and interest payment and show the whole thing together. So you see exactly what you're getting into. So by the time you have the contract and you're ready to close, it's like, oh, yep, I know all that. It's not a big deal.
Love
So
it.
I think you're hitting the nail on the head with the most important things. And then, finally recapping is prices aren't going down. We're seeing rates edge down, inventory is still low, prices are seeping up again, and we're seeing multiple offers, cash offers, and it's happening. So if you're on the sideline, I understand that, but don't be on the sideline thinking that there's a better deal in 6 months. It certainly doesn't look that way.
Yeah, absolutely. Well, hey, thank you so much for your time. This was fantastic. We'll have to do this again soon.
I love being
This
on
is
the
great.
Lesley show. This is fantastic. I feel like I'm famous. So it was a pleasure. Thank you so much. Good to see you.
Thank you. You too. And I will talk to you soon. I appreciate
Okay.
you.
See
All
you.
right. Bye.